Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
I'm Vera Nelson, broker owner of Hyde Realty. Hyde Realty is a boutique agency located in Southern California, dedicated to our clients. We cover all of Los Angeles, Orange, Riverside, San Bernardino, San Diego, Ventura, and Kern counties. Whether you're looking to purchase your first home or sell your last, my team and I are here to help you. With years of experience representing active service members and veterans, we have the tools to get your offer accepted. We work hand in hand with first-time buyers to help them achieve their goal of ownership. We represent the savviest of buyers and sellers, from investors to probate and multi-million-dollar transactions. The Hyde team is ready to help and serve you with the knowledge and experience you deserve. Please reach out today if you would like to discuss your needs and how we can serve you. Once again, I'm Vera, broker owner of Hyde Realty, 626-298-3025. Vera at Hyde, Hythe, Realty, REALTY.com.
Oh, is it time to go for a ride? Hold, please. Let me grab a few Road Sodies to go. Our newest collection, Road Sodies, is a tribute to all of those die-hard passengers enjoying the dunes and mud while the captain does all the work. We have tees, hoodies, and hats to help you show off your style. This design just launched. Be the first to grab yours today and show up to your next adventure in style. RVRmoms.com.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. And today we are going to be talking all about the Federal Reserve. They did come out, they did cut interest rates by a quarter, but now we are seeing some massive changing. So interest rates right now are going through the roof. Our interest rates are changing very quickly. We've already had a worsening prices today. We will probably have higher interest rates again tomorrow. The Dow has dropped by 1,100 points. So I'm going to read an article that I pulled up from CNBC to try to give you an idea of why and what is going on. So the first thing that we're going to do is we're going to start with the announcement from the Fed, because I think it is important for you to hear exactly what they had to say. And then we're going to get into, why is the Dow dropping? Why are interest rates going up? Why are they getting worse, even though we had a 0.25% decrease in the Federal Reserve prime rate? I want to remind everybody that this is an interactive show, so please feel free to put your questions and comments into the feed. We are more than welcome, or I am more than happy to read those out loud and answer them for you. I do apologize. My text message was supposed to go out today, and for some reason it did not go out. So after I read the Fed statement, I am going to take a 60-second commercial break, and I'm going to try to get that text message out to my clients and to my listeners who have been waiting for the text to know that I went live. So that will be a 60-second commercial after I start here with the Fed announcement. So we're going to go ahead and read this for now. And this was just released at 2 p.m. Eastern time today. And it says, recent indicators suggest that economic activity has continued to expand at a solid pace. Since earlier in the year, labor market conditions have generally eased and the unemployment rate has moved up, but remains low. Inflation has made progress towards the committee's 2% objective, but remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee judges that the risks to achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. In support of its goals, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point to 4.25% to 4.5%. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and financial and international developments. So basically what they're saying is things are not looking good. And I did watch a lot of the press conference today that he had after making the announcement, and the economic outlook for 2025, as far as what I perceived him to be talking and saying, is that it was weak, that he is concerned that the labor market has eased, that unemployment is up. Now, they still feel that unemployment is at a good level. Even though unemployment numbers are up, he still feels that we are still within a strong level. However, the question marks remain for 2025. And where before in earlier 2024, earlier this year, they were saying how many rate cuts that they were anticipating for this year, how many rate cuts that they were anticipating for 2025, because of more of a bleak outlook on we don't know what's coming and we don't know exactly what is going to happen. They really wouldn't say if they were going to do additional rate cuts in 2025. So they weren't ruling it out, but they weren't giving us any kind of feedback that yes, that they were going to give us those rate cuts. So starts the storm of, the stock market right now is down significantly. The Dow is down by 1,100 points, which is what I saw right before I came on here in the studio live. As I mentioned, interest rates for mortgage-backed securities, that is not good news for mortgages. In the statement that I just read to you, it said that they were going to continue to sell off mortgage-backed securities that they hold on their books. When they sell off those mortgage-backed securities, there just isn't that same appetite for people to be putting money into that bond market. So, we've got a lot cooking today. A lot is happening, and we need to get down to the bottom of why, and then what do we think is going to happen down the road. So with that, like I said, I'm going to take a super, super quick break just so that I can make sure that I can get my text message out to all of my listeners and they don't miss this program while we are live. So stay tuned. We'll be right back.
Oh, is it time to go for a ride? Hold, please. Let me grab a few road sodies to go. Our newest collection, Road Sodies, is a tribute to all of those die-hard passengers enjoying the dunes and mud while the captain does all the work. We have tees, hoodies, and hats to help you show off your style. This design just launched. Be the first to grab yours today and show up to your next adventure in style. RVRmoms.com.
I'm Vera Nelson, broker-owner of Hyde Realty. Hyde Realty is a boutique agency located in Southern California, dedicated to our clients. We cover all of Los Angeles, Orange, Riverside, San Bernardino, San Diego, Ventura, and Kern counties. Whether you're looking to purchase your first home or sell your last, my team and I are here to help you. With years of experience representing active service members and veterans, we have the tools to get your offer accepted. We work hand in hand with first-time buyers to help them achieve their goal of ownership. We represent the savviest of buyers and sellers, from investors to probate and multi-million-dollar transactions. The Hyde team is ready to help and serve you with the knowledge and experience you deserve. Please reach out today if you would like to discuss your needs and how we can serve you. Once again, I'm Vera, broker-owner of Hyde Realty, 626-298-3025. Vera at Hyde, Hythe, Realty, REALTY.com.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And I was able to get that text message set up. So it is going to go out at 1:30 Pacific time, so in about 6 minutes. And if you are joining us late because that text message came out to you late, and if my show is already done, I want to invite everybody to always call, always talk to me. You can reach us at 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or you can head on over to our website at mortgagemomradio.com. And on the website, there is a contact us button. You can send me an email. You can ask me your questions, and I would be more than happy to reach back out to you to respond, to give you my thoughts. But please feel free to do so. If you jump on late and we're already done and you don't get to ask your questions, but I do want to remind everybody that this is a live show. You are more than welcome to put your questions into the feed, and you are more than welcome to ask any questions that you have. I'll read them out loud and I will answer them for you. That is what this show is all about. If you have questions, there is a very, very good chance that someone else has the same question. So please ask it, because you are helping everybody by getting the information and the answers out there for all to know. Okay. So right before all of that, right before the break, I read the federal announcement. We now know that they dropped the interest rate today by another 0.25% for the federal funds rate. So what is the federal funds rate connected to? It is directly connected to credit cards. It is directly connected to short term. So home equity lines of credit, student loans, car loans. You will see those interest rates start to slowly move down as they have started to bring that Federal Reserve prime rate down. So they've done 3 cuts now, which is really great. But I've explained before and in numerous shows that home mortgage rates are not tied to the Federal Reserve prime rate. We are actually tied to mortgage-backed securities, notes, bonds, treasuries. So depending on where investors are putting their money, where they feel that their money is going to be working best for them, determines where our interest rates go. So if they start to feel that things are uneasy and they start to buy into bonds and longer term, maybe not going to make them as much money, they're going to be a safer long-term investment, then we're going to start to see interest rates go down. If they're putting money into the stock market, so they're taking it out of bonds and securities and they're putting it into the stock market that's more aggressive because they feel that's where they're going to make their money, then we're going to see our rates go up. And so that's just a general rule. That's not exactly how it works, but a good explanation. So what we've seen recently is that actually, since the election, the stock market has been doing fabulous. It's been doing really, really great. And so we've seen very slowly our interest rates creeping up and getting a little bit higher and higher. So with what happened today, although today we're seeing that the rate sheets are not looking so great, if we see a lot of money come out of the stock market and start getting dumped into longer term, more secure investments like mortgage notes, bonds, securities, mortgage-backed securities, we could actually see our interest rates start to improve. So it's going to be very, very important for you if you've been thinking about buying a home or you've been thinking about doing a refinance. It is going to be very, very important for you to be very, very close and very connected with your loan officer. So as always, I always suggest that you do reach out to us, that you give us a call, and that you do speak with our office. Get yourself prepared, get yourself ready, get yourself pre-approved, get that refinance application started, and wait for the right timing for the button push to get that loan locked in. So how do you do that? As I mentioned before, you go to our website, go to mortgagemomradio.com, or you give us a call. And that number is 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Now, I do want to get into the Dow and what exactly is going on and why is it dropping so crazy right now. So I'm going to read to you. And again, I don't want to get into trouble for having taken information from somebody or anything like that. So I am going to tell you that this is breaking news. It came out on CNBC. You can find it if you Google it. You can go to the CNBC website. So I'm giving them 100% full credit for what I'm going to read, but I'm going to try to give you an idea of what is going on right now. So from CNBC, it says the Dow Jones Industrial Average sank deeper into the history books on Wednesday, with the index posting its 10th straight losing day as a disappointing rate outlook for the Federal Reserve rocked the stock market. The Dow lost 1,123 points, or 2.58%, to 42,326.87 cents. Its biggest loss since August and its worst losing streak since an 11-day slide in 1974. So I do want to preempt that with, yes, today was very disappointing and a huge drop today, but we are actually at the 11th day right now of losses in the stock market. And we are actually at about the 11th day right now of us seeing interest rates climbing higher. Each day, the news has not been great, and they have been anticipating. If you've been following me for a long time, you always hear me use the word anticipating. Our rate sheets move with anticipation. They have been anticipating that the rate cut was not going to be crazy today, that it was going to be a very small, insignificant amount, which was just that quarter point that we got today. So they've been building up to this. Now, one thing that isn't making any sense of all the years that I have been in this industry is that typically when the stock market does not do well, we actually see our rate sheets improve. Because as I said just a bit ago, when they pull their money out of more aggressive stocks and they put them into longer term investments, safer investments, we typically see that mortgage-backed securities and notes, bonds all start to get purchased. We aren't seeing that right now. So it's really a very weird time, and there is nobody that can actually tell you exactly what is going to happen. There can be speculation. You can get an economist who is very good at what they do, who's been doing it for a very long time, who can tell you what they think is going to happen. But this is not something that's ever happened before. And it's not something that over the 30 years that I've been doing this, that I've actually seen things play out this way. So it is going to be very interesting to see how the rest of this week, how next week starts to play out as things start to calm down from today's press conference and from today's Federal Reserve statement. So let's keep going with what CNBC had to say. So it says the central bank reduced its overnight borrowing rate by a quarter point to a target range of 4.25% to 4.5% as expected. So again, that's what was anticipated. And that's why over the last 11 days, things have gradually gotten worse and higher in mortgage rates. However, the Fed indicated Wednesday afternoon it would only cut rates twice in 2025. So again, earlier this year, they were saying that they were going to cut in 2025, and they made it sound like they were going to be significant cuts and quite a few of them. Today, they would only say probably twice and really wouldn't even commit, which is how I interpreted the press conference. Okay, so again, it's all comes down to interpretation and your interpretation of what you heard. That is what I interpreted was there's probably going to be 2 rate cuts. There may not be any. There could be more. And it was so vague that to me, it was very disappointing. Let's see. Cut rates twice in 2025, fewer than the bank's 4 cuts given in its last forecast. Fed Chair Jerome Powell said that the central bank's move to cut rates in recent months allows it to be more cautious as we consider more adjustments to our policy rate. Before Wednesday, traders were hoping the Fed would stay aggressive with rate cuts in 2025, fueling the bull market further. Treasury yields jumped following the Fed's cautious outlook, pressuring share prices. The 10-year Treasury yield crossed above 4.5%. Risk assets and a very highly valued stock market doesn't like the idea that rate cuts are less likely on both sides of the mandate. Double Line Capital CEO Jeff Gundlach, I think that's how he says his name, said on CNBC's Closing Bell, the takeaway that I got from the press conference was there's not going to be an aggressive cutting cycle, and the market is pretty much in sync with that. The Dow's losing streak began the session after it closed above 45,000 for the first time ever on December the 4th. The total losses for the Dow during its losing streak have totaled 6%. Goodbye, Punch Bowl. No Christmas cheer from the Fed. Policymakers see higher inflation and lower unemployment in 2024. So the Fed seems to think that unemployment is actually going to be even lower than where it's at today. I personally do not believe that. I'm going to actually call BS on it. I don't think that we're going to see lower unemployment in 2025. I believe that the unemployment numbers that we have been seeing have actually not been accurate and need to be revised. So in my head, in my thought process, and in my interpretation, I actually think that we're going to see some concern with unemployment, which could very quickly turn around anything that was said today. And I have explained this time and time again, that they come out, they make a statement. Fear, anticipation, excited feelings will immediately trigger selling, buying, rates to go up, rates to come down. Then things start to level off. Then we start to get true, real numbers. And then all of a sudden, it's a whole different animal, right? Which is why it's very, very difficult for anybody to predict what is going to happen. Let's see. It says the easy lifting is done now that rates are no longer clearly restrictive. It's a logical time to pause. So the Federal Reserve seems to feel that where they've got the Fed funds rate at as of today, after 3 rate cuts, is it's no longer restrictive. But it is. It's still too high, at least in my opinion. So I do think that they need to continue to cut. I don't think that 2 cuts in 2025 are going to be enough. And I can absolutely see why so many investors were concerned after today's Fed meeting. It's very concerning if they think that we are in a good place right now, that unemployment is where it should be, that interest rates are where they should be. It's very disappointing and concerning that they're going to try to carry this through 2025 and to not correct anything further. So this has spiked a massive change in what has happened today. Interest rates, like I said, have gone up quite significantly. We've lost quite a bit in our bond market and our mortgage-backed securities, and the Dow has lost a lot in the stock market. Lyndon jumps on. I think it's Linda, and it says, hi, it's Linda. Very interesting news about the rates. Thanks for sharing, Linda. You are very, very welcome. Thank you for joining. And again, you guys, I'm so sorry that my text message did not go out when it was supposed to. It just went out right now, which is why some of you guys are just jumping on. So if I end the show and you weren't finished and you keep watching and you've got additional questions, please do not hesitate to reach out and to ask anything that you'd like. You can call the office at 844-935-3634, or you can go to my website at mortgagemomradio.com. There is a button there that says contact us, and you can send a message with any question that you may have. Please feel free to do so. More than happy to respond to your emails. And if you'd like, we can always pick up a call and have a conversation together. Heather jumps on. Heather says, hi, everyone. So Heather, also, thank you so much for joining on and being part of the show today. We are going to take a super quick break. That way you guys can all kind of get caught up with what we've already talked about here in the show. I'm going to look for questions, and if I don't have any, I'm going to do a recap of everything that we discussed, and then I'm going to shut the show down for the day. But stay tuned. We'll be right back.
I'm Vera Nelson, broker-owner of Hyde Realty. Hyde Realty is a boutique agency located in Southern California, dedicated to our clients. We cover all of Los Angeles, Orange, Riverside, San Bernardino, San Diego, Ventura, and Kern counties. Whether you're looking to purchase your first home or sell your last, my team and I are here to help you. With years of experience representing active service members and veterans, we have the tools to get your offer accepted. We work hand in hand with first-time buyers to help them achieve their goal of ownership. We represent the savviest of buyers and sellers, from investors to probate and multi-million-dollar transactions. The Hive team is ready to help and serve you with the knowledge and experience you deserve. Please reach out today if you would like to discuss your needs and how we can serve you. Once again, I'm Vera, broker-owner of Hyde Realty, 626-298-3025. Vera at Hyde, Hythe, Realty, REALTY.com.
Oh, is it time to go for a ride? Hold, please. Let me grab a few road sodies to go. Our newest collection, Road Sodies, is a tribute to all of those die-hard passengers enjoying the dunes and mud while the captain does all the work. We have tees, hoodies, and hats to help you show off your style. This design just launched. Be the first to grab yours today and show up to your next adventure in style. RVRmoms.com.
Okay, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. And let's get to questions. So Michelle does ask, she says, stocks went down, interest rates down, but consumer and house prices didn't come down. Am I right? So Michelle, let's kind of back that up for a minute. So we're as of today. So talking about today, stocks went down. Yes. Interest rates, the Federal Reserve prime rate went down by 0.25%. Mortgage interest rates went up. And then she said house prices didn't come down. So no, house prices have truly not come down. We've seen a bit of a softening in the market, homes staying on the market for a little bit longer than they were previously. However, our inventory is still very low. So the sellers holding out for the price that they want is working at the moment. But things are softening a bit. So they are staying on the market just a little bit longer than they were previously. Buyers we're starting to see are getting closing cost credits to help them cover closing costs, where before it was very difficult to get a seller to give any kind of a credit at all. We're also seeing that sellers are having to come to reality, right? So it used to be that you could list your home for sale for more than what the last property sold for that was in your tract. So let's say that you live in a community where it's a tract housing community and certain floor plans have been selling for certain prices. It was that you could actually put your home higher than what the last one sold, and the chances of you getting that higher price were very, very high. Now what's happening is that the sellers are putting the prices higher than the last sold, and then they're sitting on the market. When they bring that price down to where the last one sold at, they are getting movement and they are getting offers. So we've seen a bit of a softening, but we haven't actually seen home prices truly start to come down yet. But interest rates have actually gone up as far as mortgage rates today. So from yesterday to today, they are higher. Now, if we go back a year from now, where were we in December of 24 to where are we in December of 23 to where we are in December of 24? Interest rates right now today are definitely lower than they were 1 year ago. So over time, slowly, our interest rates have continued to come down. But we do continue to get the peaks and the valleys, and today is definitely a peak. Today, interest rates are higher than they were yesterday. And for this entire week, starting off on Monday, they have continued to get worse. So the hopes are, if the stock market continues to not do well, that investors will start to put money into those longer term investments, which will typically help our rate sheets, our mortgage rate sheets. So that would be the hopes, to get interest rates down a bit for mortgage rates. However, it's not hopeful, for people that have their money in the stock market and their 401ks are losing money. So I'm not hoping for anything in particular. I'm just kind of giving you guys an idea of what generally and typically we will see happen during the ups and downs. This time, though, as of today, rates are getting worse and the stock market is down. And it doesn't usually work that way. That's not that's not standard. So it is going to be very interesting to see how the next week to 2 weeks actually plays out. Michelle also said, is it true that mortgage rates don't really come down when Fed rates are down? And that is exactly true. So the mortgage rates, things directly connected to that Federal Reserve prime rate are your credit cards, your home equity lines of credit. If you go to the car dealership to go get yourself a new loan on a car, the rate will be slightly lower than what it would have been a month ago. If you are signing up for a brand new student loan, shorter term, 5-year notes, 6-year, 7-year notes are going to be affected by that Federal Reserve prime rate. Mortgage rates are not. Mortgage rates are part of the mortgage-backed securities. And when I read the Fed statement and they said we're going to continue to sell off the mortgage-backed securities from our sheets, from our balance sheets, that every time that they're selling those, it's just making things worse, right? When you sell a big bulk of something, you're selling it at a discounted price. So people are losing. So more are pulling it out, more are losing money. And so it's not helping our mortgage interest rates by any means as they continue to get rid of those mortgage-backed securities off their balance sheets. Now, if they went into a big bull cycle and started buying a bunch of mortgage-backed securities, then that would actually help our mortgage rates. So, the hope is that, something is going to give and we're going to start to see those mortgage rates come down. I don't believe what the Fed said in their statement that we are currently, not restrictive in where they've got the Federal Reserve prime rate as of today. I feel we are still restrictive. I don't believe what they said, that they think that unemployment is going to be less lower in 2025 than it is currently. I don't believe that. So I think it is going to be very, very interesting to see how, again, not just the next week or 2 weeks plays out, but really what's going to happen through 2025. And if you guys watch anybody on any platform that tries to tell you exactly what's going to happen, read in the middle. Take what they're saying, take what someone else is saying, and go somewhere in the middle, because nobody can tell you what is going to happen. Nobody can tell you how things are going to play out. What would typically happen today with, the Dow losing 1,100 points, typically what we would see is that mortgage rates get better, our rate sheets improve. That is not typical. That's not happening. So nobody can truly tell you what's going to happen next year. Nobody can tell you how things are going to play out. It's going to be interesting to see how things play out. And as always, I'm going to continue to do this show to educate my listeners and keep you guys involved in what is happening, what is going on with the market, and, make sure that you guys are ready to go. So, one thing that Michelle did say is, home prices really haven't come down. They really haven't. And they're probably, if we do come down a little bit, it's probably not going to be very much. People aren't going to lose their homes right now. They've got tons of equity. People aren't going to lose their homes right now. They've got great interest rates. People aren't going to lose their homes right now because their monthly payments are affordable, more affordable than if they were to go and they were to rent. So if you've been thinking about buying a home, as I mentioned a couple of shows back, you cannot really time the market. It's too difficult. If you need to buy a home, you need a bigger property because your family is growing. You need a smaller property because your kids, have all moved out and you're living in this big giant home. There are ways to obtain what you need. There's ways to do it to get you guys into a monthly payment that is affordable. There are ways to buy that interest rate down for the next couple of years so that we've got time to let all of this craziness and all of this nonsense play out and then have the opportunity to refinance at a lower interest rate. There are ways to do everything if you guys are in the market or you need it. Trying to time the market is just not going to work, not right now in this craziness that we're in. And we're in an area that we've never been in before. We're in an area that we don't know what the outcome's going to be or how it's going to play out. Over anybody that is still alive today. So if you are living today and you're an adult today, nobody has actually seen a situation like COVID. So yeah, sure, you guys could go way back to the Spanish flu and all that stuff, but God knows what happened back then, right? In today and modern times, we never saw anything like COVID happen. We never saw shutdowns. We never saw interest rates from the Federal Reserve go to zero. We never saw anything take place that took place. And so now we are dealing with repercussions that we've never experienced before. So it is very, very difficult to say exactly what's going to play out, what's going to happen next year. I don't even believe that we're only going to see 2 rate cuts, as the Fed is saying, in 2025. I think that it was an ugly report today. I think that the Fed conference, the Federal Reserve conference, was very disappointing. But a lot of times they will also do that to us. And then all of a sudden things change. Unemployment report is worse. Things start to happen that makes them jump into a completely different mode. So in my opinion, I called it in 2022 and in 2023. And I told you guys that I did not believe that we would see. So going all the way back to 22, if you guys don't believe me, go back to my old videos. I said that in 2022, I felt that we were not going to see our first rate cuts until the end of the third quarter, beginning of the fourth quarter. That is exactly what happened. I was right on. I don't believe we're going to only see 2 rate cuts in 2025. I think we will actually more than likely see 3 to 4 rate cuts. But I think that they just need to get the data and they need to truly see things play out the way that they're supposed to play out. But that is my personal opinion. do not hang your hat on that. But I do still believe that throughout the year of 2025, we are going to see mortgage rates start to get better. And I believe that in December of 25, that our interest rates will be lower than where they are today, December of 24. So if you've had plans to, purchase a home or refinance, whatever it is that you might need to do, debt consolidate, do not put it on hold, get things done, get your plans completed, get yourself more comfortable. And then obviously, as interest rates come down, we can always do something to even improve your situation more from that point. So don't hesitate, call us. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Head on over to the website at mortgagemomradio.com. You can send me an email right there. It says contact us. You can schedule an appointment for a phone call right through the website as well if you'd like to get a one-on-one with me. So just remember that those options are always there if you'd like to speak with my office directly. Why Not did say Merry Christmas and Happy Holidays all. So that is wonderful. Thank you so much. Why Not? Yes, I do want to let you guys know, remind you that this is going to be the last show that I do this year. I will be back the first Wednesday after the 1st. I don't even know what day that is. Mikey, do you know what day the 1st is? I think it's like a Thursday or something. But I will be back the first Wednesday after the 1st. So in the meantime, if you guys want to talk with me directly, please feel free to do so. But yes, Merry Christmas and Happy Holidays to all of you guys who have been listening to me for all of these years. I so appreciate it. You have no idea. It warms my heart, and I can't thank you enough. And then Why Not did say, will home prices drop as interest rates drop? So, that's a very great question, and nobody can actually answer that for certain. I would actually say no. I would say that right now is the softest point of the market. It is not only the holiday season where most people do not want to be making moves, and they do not want to be selling homes, and they do not want to be moving. So this is always a very soft part of the year, just in general in history. December and January, February, even November are very slow. So if interest rates, I do believe, I'm going to throw this out there. I believe that if we see interest rates get into the high fives, so 5.875, I think that we are going to actually see a lot more movement. We'll see more listings. We're going to see more sales. We're going to see more first-time buyers. We're going to see more people trading homes, selling one to buy the next. We're going to see more people renting one out and buying another when we hit that 5.875. That is when we get a lot of transactions happening in the market. We do not typically see home values dropping. So I think that as interest rates come down, we're going to actually see price improvement or price increases. We're going to see more home improvement or home appreciation. I keep using the wrong word. We're going to see more home appreciation as those interest rates do come down. So right now is going to be your very best time between now and the next couple of months to be able to get into a home, get a good deal on the home, possibly be able to get the seller to come down a little bit on price. If they don't come down on price, there's a very good chance you'd be able to get closing cost credits from them, which could help us to dramatically lower the interest rate, making that payment more affordable. So I do think that you've got a short window of time that's going to be open and available to be able to get into something. But as interest rates come down further, we hit those fives. And I do think that we're going to see a lot more transactions, a lot more people that are out and about looking. And I don't think that our inventory is still at a level yet that can handle the additional people that are going to jump into market at that point. So I do think that we'll see home values actually start to increase again. So I hope that answered your question. But with that, I don't see any more questions coming in. I will run one last commercial. And I do want to throw a big shout out to Vera Nelson. I've been running her commercial throughout my show, and she is just an absolutely wonderful lady. Her and her team, they do a great job. They do cover a very, very large territory of Southern California. I have seen them do sell homes from Bakersfield to San Bernardino to Victorville. They're located in Pasadena. She's got a fairly large team, and they all work different areas. And so if you're looking for somebody that can help you with multiple properties in multiple locations, She is a really great lady, and I would definitely suggest that you guys reach out to her. It was Vera Nelson. We'll run her commercial again right now. And if there are any more questions, please get them in the feed. When I get back, I will answer those. And if there is no more questions, I'm going to wrap it up for the year. I'm going to wrap it up for 2024. So stay tuned. We'll be right back.
Oh, is it time to go for a ride? Hold, please. Let me grab a few road sodies to go. Our newest collection, Road Sodies, is a tribute to all of those die-hard passengers enjoying the dunes and mud while the captain does all the work. We have tees, hoodies, and hats to help you show off your style. This design just launched. Be the first to grab yours today and show up to your next adventure in style. RVRmoms.com.
I'm Vera Nelson, broker-owner of Hyde Realty. Hyde Realty is a boutique agency located in Southern California, dedicated to our clients. We cover all of Los Angeles, Orange, Riverside, San Bernardino, San Diego, Ventura, and Kern counties. Whether you're looking to purchase your first home or sell your last, my team and I are here to help you. With years of experience representing active service members and veterans, the tools to get your offer accepted. We work hand in hand with first-time buyers to help them achieve their goal of ownership. We represent the savviest of buyers and sellers, from investors to probate and multi-million-dollar transactions. The Hyde team is ready to help and serve you with the knowledge and experience you deserve. Please reach out today if you would like to discuss your needs and how we can serve you. Once again, I'm Vera, broker-owner of Hyde Realty, 626-298-3025. Vera at Hyde, Hythe, Realty, REALTY.com.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and this is going to be the last section of the show today. So I do see that John jumped in and asked a question. He said, locked in a rate at 6.5% for a property. Can I pay this property in cash and apply this rate to a different property? So that answer would be no. So I'm going to kind of go in a couple of different directions because the question was a little bit vague. But if you already have an outstanding mortgage loan with a rate of 6.5% tied to a property, when you sell that property, that mortgage note gets paid off. It can't be transferred to another property. If you locked in an interest rate, let's say that you are currently under contract on a house that you plan to buy, and you have that interest rate locked in on that address, if you then start a new loan with a new property address, the interest rate is actually locked to the address, the borrower, and the address. It is not actually locked to the borrower or your social. It is actually locked to both. That interest rate gets locked to that transaction. So you can't take that rate, transfer it to a completely different property address. You can't do that. You would have to actually start all over again and relock that interest rate. So if you have the money to pay cash for the property and you're wanting to buy two, and you've already got that interest rate locked in, and it is better than what you might be able to get today if you were to start calling and getting rate quotes, then you might want to close that loan with that interest rate and then pay cash for the next property. So I hope that that answered your question. If not, please feel free to throw in, more detail, and I'd be happy to continue to explain. You're also welcome to go to my website and hit the contact me button or contact us button and send me an email. I'd be happy to go back and forth with you personally. Again, you guys, if you go to mortgagemomradio.com, there is a contact us button there. There is an appointment button there that you could schedule a phone call with us if you'd like. And please remember, you can always call the office and get us directly at 844-935-3634. That's 844-WE-LEND-FOR-YOU. WELEND and the number 4. So I'm going to say that that's it for today. I don't see any other questions that have come in. I'm going to go ahead and call it quits, but I do want to remind everybody the text went out late. You guys might be a little bit behind in watching the show. So even though I'm going to shut it off now, if you have additional questions, please, you can put them in the comments of YouTube. I will respond to those. You can send me an email if you'd like. Again, go to the website. You can go. You can email me directly if that's easier. Debbie, DEBBIE at mortgagemomradio.com. And you can call the office at 844-935-3634. Why Not says Happy New Year, everyone. So yes, Merry Christmas, Happy Holidays, Happy New Year. Goodbye 2024. And let's all keep our fingers crossed that we start to see some greatness happening with interest rates in 2025. So I'll be back and I'll let you guys know what happens over the next couple weeks. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.